Imagine having a special place to stash your extra cash where it actually earns more cash. Sounds too good to be true, right? Well, actually, that's what savings and money market accounts are all about. In this video, we're going to explore both types, compare them, and give you some great info you can use on your financial journey. So let's dive into some of the specifics about savings accounts. A savings account is an account at a bank, credit union, or other financial entity where you can keep money that you are not immediately using for things like bills. The financial institution will then pay you a percentage of the money that you have deposited and kept on deposit with them over a period of time, called interest. This is for allowing them to utilize that money while it's deposited with them. In looking, you will probably see that there are regular savings accounts and high yield varieties. Difference being that for the regular savings, it's generally a lower interest rate, maybe a few less restrictions on taking your money in and out. High yield, sometimes that will mean you've got to deposit a certain amount before you get the interest rate. There may be some additional restrictions on how many times you can withdraw money, etc. So you just want to think about how often you're going to need to move money in and out and what kind of goals you're saving for, the length of time of those. And just to touch on briefly again, savings accounts differ from checking accounts in that, yes, there generally are limits on the number of times that you can withdraw money in a month so that you're not using it as you would a checking where you're doing a lot of bill paying out of it and have things coming in and out real often. When you have a savings account with a bank, it is FDIC insured, or a credit union is NCUA insured. And what those abbreviations mean is essentially that your deposits that are kept with one of those institutions, should something happen to the bank or credit union, would be protected up to an amount of $250,000. Well, I would say savings accounts in general are a great place to keep money for short-term goals. I would say the high yield savings accounts especially are the good places for those medium term goals and emergency funds that you're building up over time. Now let's take a look at what money market accounts are. You can think of money market accounts like a hybrid of traditional savings and checking accounts. You can possibly earn higher interest rates with money markets because often the minimum amount of money that you're required to deposit is higher. Some offer tiered levels of interest rates depending on how much money you have in there. Often with money market accounts, you get options to write checks or use a debit card that you might not have with a traditional checking account. Many times with money market accounts, you are required to keep a minimum balance or you will be dinged with fees. So that's something to keep in mind. And usually, like traditional and other types of savings accounts, you're limited on your withdrawals per month. There are some distinct ways in which traditional savings accounts, high yield savings accounts, and money market accounts are similar. They are both FDIC or NCUA, depending on bank or credit union, insured up to $250,000. Both allow you to earn interest and grow your money over time. Both generally only allow you to make a certain number of withdrawals per month. And both are designed to be the type of accounts where you can build up your financial resources over time. So how are traditional savings accounts and high yield savings accounts different than money market accounts? Interest rates can certainly be quite different between basic savings accounts and your money market accounts. When it comes to high yield savings and money market, a lot of times they may be pretty similar, sometimes the same. You just really have to compare. And there may be incentives for the more money that you have in the account, the higher interest rate that you will get. Money market accounts may have higher minimum balance requirements to open and to stay at that level to avoid fees. Basic savings accounts generally don't have that. Higher yield sometimes do, you just have to look. But certainly you'll need to shop around and look at conditions. Many money market accounts offer the flexibility of check writing, a debit card, one or the other, sometimes both, making for easy access to your money. These are features that aren't necessarily commonly available with other types of savings accounts. When deciding if one of these accounts or accounts are right for you, I recommend consulting a licensed financial professional, as this video is for educational purposes only, and also with them looking at how much money you plan to put in over time, how long you're going to keep it there, and what your individual financial goals are. For additional money saving and earning tips, check out my videos on my channel, and don't forget to subscribe so you'll know when the newest one drops.